Guys, welcome back to the channel. So today we're going to review the Fidelity watch list that I created. The first stock that I'm looking at is Visa. So we're going to jump right into it. Visa, as you can see, the 52-week low is 216 to 290. What I wanted to show you guys was I love Visa. I think that this is actually a buying opportunity. Visa is one of those top A-rated stocks that really doesn't sell off that much. It's an excellent company, always has good earnings. But I wanted to show you a few things of why I like it. So you have the dividend of 0.76, and I know that doesn't sound like much, but wait until you see their history. You can see that Visa has paid a dividend. This is the year right here from May 2024. They're paying 52 cents, and it has rose over the years. So just looking from 2024 going all the way down, you can see it's paid for over 20 years dividends. Now, these dividends might not seem that much, but when you look at the overall growth of this company, look at the chart, it has completely gone up over the last 20 years. So in my opinion, Visa is something that I'm going to add to the long-term portfolio. And I love this bullish channel that we have. And remember, when you're on Fidelity, you click under chart over here. And then what you can do is you can click on draw, and then you can do channel. And then you could start from here and just draw the channel. And then Fidelity will match it up here so you can see the channel that we're in right now. So I like to try to buy, not at the top obviously, of the trend channel, but I like to try to buy long term in the middle of the channel. Because I've noticed that if you stay in the middle of the channel, it likes to bounce usually from there. So anyways, let's keep moving forward here. And let's go to a smaller time frame on this. But going just to the last month, we've had some weakness from basically 300 all the way down to 275. Now, that might not seem like a big drawdown, but for a company that always proves its worth, this is something that I'm looking at. The last thing I wanted to show you on Visa is look at the research reports. It does a strong bullish report, 7.3 out of 10. And right here we have buy, buy, and buy. Now, you shouldn't buy just on analyst ratings, but it's good to see what they are thinking when it comes to the stock. And what I like seeing about Visa is look at their statistics. Look at their valuation, their market cap, their PE of 30. So that's justifiable for a growth company that does pay a nice dividend. And their gross profit margins is really what attracts me the most. 70% profit margins. That's what I'm looking for. That is monster growth. That's compared to like Google, the Microsoft, Apple. That's what you want to see. So looking over their financial statements, they give you just a quick report on them, Q2, March 31st, 2024. You could see profit margins 69.7%, and their net cash flow, look at that, millions of dollars. That's what I want to see. This is a company that has a lot to offer, and I'm going to hold them long term. Next company I want to review is Starbucks. Full disclosure, I have them in my taxable portfolio. I'll show you after this clip. They have a PE ratio of 23.6. They pay an annual dividend of $2.28, which is 2.6%. And they just paid a dividend in February 8, 2024. As you can see, they have paid dividends since 2013. So to me, this is a company that I want to own long term. Let's look at the chart. Let's review some other things about it. Looking at Starbucks on the 6-month chart, we can see that we were trading at highs of $108 all the way down to $88. I have shares in the $88 to $90 range right now. About $500 invested. I'm going to continue to build this position as long as it is under $90. That's where I'm looking for them. Let's look at them on the max chart real quick. You can see that we have a nice bullish trend, and this is kind of do or die right now, at least on a technical chart analysis. Looking at them, I am buying this because I think that this channel is very strong, and I'm buying the bottom of the channel. So we just have to be very careful here. I am buying them for long term. So I'm okay with this, and I'll continue to buy. But if you are day trading this, you definitely need to be careful because there is potential risk for this breaking at 188 and then trending down. For me, I'm okay with that. I'm buying these long term so it doesn't bother me. But you have to understand what you're getting yourself into when you are buying stocks and know, is it a short term, is it a middle term, or is it a long term trade? So that's what you have to look into as you're doing this. You can see right here, that is pretty much the break point. And I'm going to zoom in a little bit more just so you can see it because it's a little unclear. Let's go to the 1-year chart. We'll go to the 5-year chart. There you go. So go to the 2-year chart right here. If you break this level at 180, I'm sorry, 80, you're going to trend all the way down to about $70. And for me, that's okay because I'm just building a position. I will just add more to it and it won't be an issue for me. So $70 is definitely the ultimate support for this, but I'm okay buying at $80, $90, and I'll dollar cost average down to 70 and hold this long term. Just wanted to give you a little perspective. Under Fidelity, if you go under statistics, you could see the PE ratio of Starbucks is 23, so I like that. The market cap is 100 billion, and their profit margins are much lower. They're not a growth company. They give dividends, but they are expanding over the world, so I like to see this. But if you look over here, gross profit margin is 26%. So 26% profit margin, that's a lot different than Visa where it was at 70%. So I'm really working here to get the dividend, and I'm going to hold this long term and let the dividends add up. Just let the drip go as time goes by. Next stock I'm looking at is Johnson & Johnson. Now this is a stock that has paid dividends for over 30 years. PE ratio, this stock is beaten up. It's at 9, pays a dividend of $4.76, and 3.24% a year is what you're getting in dividends. I just want to show a quick graph here. You can see that 24, we paid $1.24, and then as the years go by, this has just paid dividends for over 30 years. So this is something I'm very interested in because the stock is so beat up that I'm thinking I can get some capital appreciation as well as get the dividend over time. And as you can see, it has not stopped paying dividends for so long. I mean, it started in 1995, and this is 30 years of dividends. So let's take a look at Johnson & Johnson on the Fidelity chart. As you can see, let's just get perspective here. Year to date, we are down all the way from 163 down to 146. Looking at the 1-year chart, 175 down to 146, which there is support in this 145 range right now, right here, here, and there. And then let's zoom out for a full picture here, and we have broke this trend channel. So you can see, I'm looking at this as a long-term buy, but you definitely have to be careful if you're swing trading this. But you can see that the channel from here has broken. So right there, clearly, there is some weakness in this stock. But I'm buying it because I want the dividend. I can dollar cost average in it, and if it sells off even more, I'm okay with that. But let's look at some of the fundamentals of this company. So under Fidelity, dividends, and earnings, we can see Johnson & Johnson pays 3.39%. That beats the market median for dividends from stocks. Pays a quarterly dividend, has been paying over 30 years, just like we said. Look at their earnings. Their earnings, they have beaten the last 3 quarters. 14 cents, 1 cent, 7 cents. That's pretty good. Now we're looking at statistics of Johnson & Johnson. Quickly looking here, gross profit margin, 77%. Right here, profit margin, 69.69%. So for me, this is a company that's a no-brainer. I'm going to buy them. Within Fidelity, you can see what companies are rating stocks. So this company, ISS EVA, this company report is rating Johnson & Johnson as overweight. Overweight, all that means is that they think the stock is going to perform better over the future. So they have it as a rating of 60 to 79 as an overweight. Not listed as a buy yet, but they believe it's going to perform better over the future. So I read through this report. I like seeing this. It doesn't mean it's going to persuade me buying it, but I like to see what other analysts are thinking. So definitely check out Fidelity. When they have this, you can click on the research reports section right here, and you can review like what ISS EVA is doing, Argus Research, Trading Central, and they have all different opinions on it, and you just click on the link, and then you can see whether they're bullish or bearish or neutral on it. All right, guys, so under this watch list, I have a few companies listed. If there's something in here that you think I should review, just leave it in the comment section below. I'd love to hear it. I'm always trying to analyze stocks and ETF. So this is the portfolio that we were talking about that I added to. I added Starbucks last week recently, 3% of the portfolio. We have BABA at 3%, Tesla at 3%, and my main holding right now is FSPGX. That is the growth fund. I'll post that index ETF that I hold long term. That fund will be held for many years. It holds the growth companies in Tesla, Nvidia, Apple, Microsoft, all the big dogs. And as you can see, Fidelity says that my style is in the valuation of growth right now. And as you can see, that makes sense because 91% is FSPGX, which is a growth company. So we're pretty much in all stocks, no bonds. and holding short-term cash at 1%. Each week we're adding to these companies. Each week we add $100 to FSPGX, and then I'm going to add another stock at the end of the month. It's not going to be Tesla, Bob, or Starbucks. It's going to be these three listed that I just brought up, and we're going to continue to build this portfolio. All right, guys, thanks for tuning into the channel. I really appreciate it. If you're interested in more videos, I have how to set up automatic investments that I was doing with the FSPGX that I said I buy $100 every single Monday. You could do the same thing if you want to buy a different index, ETF, or stock. I show how to do it on Fidelity. I have other Fidelity Active Trader Pro set up for the playlist. If you just want to learn how to actually actively day trade on the program, this is a great place to start under that playlist. So check it out. I just like to show my channel at the end, and if you feel like you learned something, please share it, like, comment, do whatever you like. I really appreciate it. Thanks for tuning in.